Welcome to Alpha Recap, your end-of-day market wrap from stockalpha.ai. We closed the markets, and we've got a lot to unpack from today. As always, if you have questions, you can reach us at stockalpha.ai.
Hey everybody, great to be here. Lots of headlines, lots of nuance. So, what really stands out here is how narrow the rally was, even though the indexes finished higher.
Exactly. The big picture. The tech-heavy NASDAQ Exchange Fund finished the day up about 1.2%, while the broader S&P 500 finished up about 0.5%. Small caps, though, lagged. The Russell 2000 finished down about 0.8%.
Right, and that divergence, big cap growth versus small caps, pretty much summed up the session. You had AI and communications names driving the tape, and a lot of the rest of the market just didn't follow along.
Yeah, absolutely.
So let's break down why the tape looked the way it did. First, momentum around AI beneficiaries and communication and media names buoyed the biggest names. Second, semiconductor and specific small-cap pockets were weak. That kept participation shallow. Third, macro and geopolitical headlines kept people cautious about broad risk-taking.
And analysts were pointing to a couple of other cross-currents: renewables, materials, and some real estate deal flow attracted money, while mixed crypto and cannabis news kept speculative appetite muted. It was very pick and choose.
Right. And that pick-and-choose behavior is why headline averages looked okay, even as breadth deteriorated. The big names lifted the averages, but underneath the surface, there were a lot of sectors not joining the rally.
Hold on, say that again? Breadth deteriorated?
Yes, fewer stocks were participating. So the averages went up, but a smaller group of large-cap growth names did most of the heavy lifting.
Got it. Short reactions, concentrated strength, narrow leadership, not a broad-based move.
Exactly. Let's run through the sector map quickly. Technology and communication services were the stars. Large-cap software, ad revenue recovery stories, and AI exposure drove outperformance. By contrast, semiconductors were under pressure partly because one big memory name, Micron, remained weak. Micron was still down roughly 18.4% since its last earnings release, which dragged on chip equipment and memory suppliers.
Yeah, that Micron number stuck out. I mean, when you step back and look at this, one large move in semiconductors can ripple through lots of smaller cap suppliers and equipment companies.
Right, and that helps explain why small caps underperformed. On to financials. Mixed session. Regionals kept trading around deposit flow and balance sheet narratives, while big banks with trading desks showed more resilience.
Renewables and utilities saw constructive flows too. Names tied to big renewable projects and grid work did well. Investors are still looking for yield plus growth ideas amid a somewhat hawkish policy backdrop.
Materials and mining had momentum on commodity dynamics and industrial demand. Real estate got a bump from deal flow and groundbreakings in industrial and infrastructure-related landlords, even though rate sensitivity still constrains parts of the sector.
Energy was mixed. Geopolitical headlines around shipping and the Red Sea kept oil and shipping costs on people's radars. But there wasn't a uniform push, and parts of the renewable energy chain and EV supply links outperformed traditional energy names.
Consumer, healthcare, cannabis, and crypto were a patchwork. Company-specific data and headlines drove the moves. So really, today reinforced event-driven trading rather than broad sector rotations.
Short reactions, selective, event-driven, patchwork.
Let's move into the individual stock highlights, because a few names really illustrated this market structure. Micron, as we mentioned, remained a notable underperformer, down roughly 18.4% since its earnings, and it's weighing on the semiconductor supply chain.
SAP rallied after a strong revenue print and constructive guidance commentary. Analysts called it a positive read-through for the enterprise software recovery and the upgrade cycle. So that supported some of the large-cap software optimism.
Photronics, the wafer mask supplier, was in focus as analysts reassessed chip capital intensity. Coverage notes there were mixed. Some uncertainty about the pace of CapEx.
EPAM systems faced headwinds tied to project cadence and margin sensitivity, which pressured IT services. And Archer Daniels Midland popped into conversations as agricultural and commodity narratives got attention. Supply and export dynamics were being discussed.
Salesforce drew commentary about institutional accumulation, which supported broader enterprise software optimism. So you had big software winners and cyclical or small-cap laggards in the same tape.
Which is, honestly, what made the day feel so uneven. You could find clear winners and clear losers, but fewer mid-cap names joining the winners list.
Let's talk macro and Fed implications briefly. No major macro shock today, but markets were still negotiating Fed timing for policy easing. The consensus is the Fed remains data-dependent. Inflation has cooled from last year's peak, but it's not universally signaling an imminent aggressive pivot.
So rate-sensitive areas, like mortgage REITs, some small caps, and parts of consumer sectors stayed vulnerable to volatility. Treasury yields were moderately higher intraday on growth and geopolitical headlines, which helped financials a bit, but the overall tone was cautious.
Analysts noted that weaker breadth plus megacap leadership raises the risk that an adverse macro surprise could quickly unwind narrow gains. So traders are watching inflation prints, labor data, and Fed speakers for clues on when rate cut expectations might shift.
Short reactions. Watch the data. Watch the Fed. Watch breadth.
Technically and fundamentally, QQQ's relative strength versus the S&P suggests momentum still favored large-cap growth. But that divergence, strong mega-cap versus weak small-cap, warns of concentrated risk. ETF flows were skewed toward large-cap liquid growth exposures, while small-cap flows lagged.
So, what really matters here is stock selection and event awareness. With leadership narrow, company-specific catalysts like earnings, guidance, and deal activity are where you find meaningful moves.
Agreed. Looking ahead to the next session, there are a few clear things to watch. 1. Breadth. If more sectors start joining the rally, the advance looks healthier. 2. Semiconductor follow-through. Memory stabilization would help broaden participation. 3. Fed speak and economic prints. Those could rotate leadership towards cyclicals and small caps if easing expectations firm up.
And 4. Earnings and company-specific news. SAP's strength will be watched for similar signals from other software names. Also watch positioning in the big ETFs. Flows into broad or sector products often foreshadow rotation.
Historically, this pattern, index gains driven by concentrated megacap strength with lagging small caps, has shown up in post-recession recoveries and late-cycle rallies. It can extend, but history warns narrow rallies can correct sharply if macro or liquidity conditions change.
Final takeaways? I'll toss out 3. 1. Headline indexes can mask important internal weakness. 2. The market is rewarding AI exposure, software strength, and media rebounds. 3. Semiconductors, small caps, and rate-sensitive pockets remain vulnerable until we see broader participation.
And I'll add a risk management note. With concentrated leadership, pay attention to breadth metrics and flows. Analysts note that event-driven strategies and selectivity are likely to matter more than broad beta right now.
Short reactions. Narrow rally. Pick your spots. Manage risk.
Quick reminder, we are recapping a session that already closed. All descriptions of market action were in the past tense. This was an informational discussion based on market observations, not personalized investing advice.
If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for joining us on Alpha Recap. We'll be back after the next close. Stay curious, stay disciplined, and reach out at stockalpha.ai with your questions.